Good afternoon, everybody, and welcome to the weekly LendIt Fintech News Roundup. My name is Peter Renton, Chairman and Co-founder of LendIt Fintech. I'm joined by my good friend and colleague, Bo Bruskern, and a good friend of LendIt for many years, Dan Kwan. How are you doing, guys?
Great,
thank you.
So before we kick it off, Dan, why don't you just introduce yourself? Tell everybody. I mean, a lot of people know you from your time at the CFPB, but tell us what you're doing now.
Sure. Yeah, I guess my newest innovation is that I co-founded a venture fund called Navcom Ventures, and we started in May. We started earlier this year, and we had our first close in May, oversubscribed, and we're investing in mostly in fintech, but also we're bleeding to insurtech. So very excited to be here, Peter. Thank you for inviting me.
All right, well, great to have you. Let's kick it off. Another busy news week. We'll start it off with the earnings. Two earnings that were highlighted: Coinbase and Upstart. Both companies crushed it. Coinbase is just ridiculous as far as some of their metrics are going. They did a 2.23 billion in revenue, 1.6 billion in profit. That is a phenomenal percentage, and they're up 4,900% year over year. The stock price it went up on the earnings, and then it was flat. But and Upstart, keep in mind, Q2 of 2020 was a really down quarter for every lender, pretty much in the online space anyway. So Upstart are also up dramatically from then. Stock was up 26% yesterday. It's up again today. These are two companies that are both doing extremely well. I would even argue probably better than many expected, particularly when some of the financial metrics come on board. What do you guys think?
Well, you want to go first, or I go first?
You jump right into it, Dan.
Sure. Yeah. Peter, you're right. So look at just their growth rate, revenue growth. So Upstart is about 11x compared to a year ago, whereas Coinbase had about 12x. And maybe just look at some comparisons. So Amazon, when IPO in '98, their top growth rate was about 300%. Mm-hmm. Google probably their growth rate doubled, revenue growth doubled in the first few months after its IPO. And even look at the most recent tech IPOs, like look at Zoom, their growth rate probably topped out less than 400%. So I definitely think pandemic plays an important role here, right? So this time last year, everything was shut down pretty much. And I think the Upstart CFO mentioned on the earnings call that they already stopped looking at the year-to-year growth because everything was over 1,000% because of the pandemic. So there's definitely some of the data is distorted. But that being said, I do think both companies represent sort of this booming fintech industry where there is definitely a lot of froth, but also I think the one of the best things the pandemic brings to us is really the digitization of financial services, and that really makes me believe that banks are, or not just banks, incumbents are more vulnerable than ever since the pandemic.
Yep.
Yeah, I just want to point out that Coinbase's products and services, what it's generating its revenue and profits from, is not just trading fees. It's not. They have a diversified product set. Like, they've been hard at work. They were founded many years ago, almost a decade ago, and they've had a lot of time to think about how this game is going to play out. And they've done some smart acquisitions, and their revenue is diversified. Now, I don't know in terms of revenue share. I imagine it's coming directionally from the trading volumes, but it's a company that is very impressive, and I think it's going to be putting up good numbers like this for quite some time.
Yep. And the interesting thing is, if you compare Coinbase with its competitors, their fees, the trading fees, are actually pretty high and pretty complex. Frankly, I still don't quite understand. I'm a Coinbase user. I still don't quite understand the trading fee schedule. It's very, very complicated. Yep. But still, people just keep using it, and I think obviously because they have probably the most crypto assets on the platform for people to trade. That's definitely a big appeal for crypto assets users. But also, it just the user experience is so slick. So
Exactly.
awesome.
It's simple.
Yeah.
And that's, I mean, Bo and I,
It's an on-ramp.
Bo and I have been using Coinbase for many years, and it's, it really was back when you had to kind of download a piece of software to hold some crypto in on your local computer or on a thumb drive. I mean, they've really done away with all that. It's just like a digital bank. It's just a slick user experience. Anyway, I want to move on. We've got many stories to cover here today. So I want to talk about Circle, staying in the crypto space. This was headline news. I think it was yesterday. They announced that they are going to apply for a bank charter. They haven't applied for a bank charter yet. They've announced they intend to. So not it was news because this would be the first crypto company that would get it. This is a federal or national bank charter. We have had others that have applied for state bank charters, but this would be the first federally licensed crypto bank. And for those who don't know, Circle, really their biggest claim to fame is the USDC stablecoin. I think it's like, last time I looked at coin market cap was like number 8 or number 9, I think, as far as largest market cap of all of the of every coin. It's $27 billion market cap. So, I think they're putting this out, saying their intent before they haven't filed anything. They're saying they're intending to file. I think just to put everyone out there that they're doing things by the book. That's what it seems like to me.
Yeah, so I can tell you a little bit story. The first time I met with Jeremy Allaire, when he just right after he started Circle, he actually took trip from Boston to DC and met with Treasury and OCC and I was at CFPB, and the first thing he said to me was I want to be fully regulated.
Right.
So this is money. This is not just some kind of crazy digital tokens. This is real people's money. So I want to make sure that I want to comply with all the rules, but tell us what the rules are. Obviously, we didn't have the rule back then. So to me, this is not a surprise that given the culture that he instituted at Circle, so they want to be the first, as you said, first federally chartered national bank if the charter is approved. I also want to say that this is probably also means that maybe implies that the special purpose charter that OCC has been really fighting for so many years probably is going to be dead, because Circle was one of the first companies that said, I want to get that special purpose charter when the OCC announced it. So, but also being a former regulator, I also think they probably going to have a very high obstacles to clear in order to get a charter. I think the OCC, frankly, is not going to be as friendly as in the last couple of years. I think the acting controller Sue has indicated that he will review all the crypto-related guidance and policy work that Brad Brooks did when he was acting. And I think that the new name, which was recently floated this week, I believe, Saul Amarola, I want to make sure I pronounce her name correctly. She's a law professor at Cornell. She actually has been very critical and very concerned about the growing risks of banks wading into the cryptocurrency business. And he also actually was very much taking a harder line on regulating financial technology companies. So I think it will really be interesting to see how Circle is going to convince this new OCC that they should be a bank. And then the FDIC, obviously, is not going to be another interesting story. And I think later we're going to talk about Brex. Circle's, their USDC is 100% reserved, right? So it's dollar for dollar reserve versus the fractional reserve that banks normally operate on. So maybe you can argue they don't need the FDIC insurance because every dollar is reserved. But getting a bank charter without FDIC insurance, Figure has tried, and we don't know whether that's going to be approved or not. Surely banks don't like that. Then you talk about the Fed, the master, access to payment system. I think the Fed has never done that yet. So it will be interesting to see how the charter application, once it's submitted, fare in the next couple of years.
Mm-hmm. I just like the addition of this discussion about full reserve banking, and I'd love to see that play out a little bit more, because I think there's a lot to be fleshed out there. And there's been an argument since the 30s about whether or not we should move to full reserve. I think it would have really big consequences on our economy if we did. This is, of course, just talking about one bank going to full reserve, but that's an interesting test, and that's part of what I love about crypto. Is there are a lot of little tests about governance and economics playing out in crypto land right now.
Indeed. Okay, let's move on. I want to talk about Brex, as Dan just prefaced for us. Brex, like everybody, it seems, they put forward their ILC application in Utah, their FDIC application. They have withdrawn both. And when the American Banker article that talked about it said that pretty much everybody who puts together an ILC charter eventually withdraws it before. I mean, Square did it, Nelnet did it, Rakuten. Rakuten has, I think, submitted and withdrawn multiple times. But it's probably not a surprise. I think Brex will eventually apply and receive a banking license, but it's not going to be a short and smooth road, it seems.
Yeah. So when Square first withdrew its application, I think, and Nelnet as well, I think the context was a bit different. I think that was right after the switch of the administration, right? So Yelena just got in, and she probably wanted. This is my guess, by the way. She probably wanted to have a clean start, and ultimately she approved the application. Well, now she approved. The board. I want to make sure I said it right. The FDIC board approved it.
Right.
Now, the problem with ILC is that you got a universal opposition, right? So the consumer groups, you got the incumbent banking industry, both are against ILC. So, and Yelena's got 2 years left in her term?
Probably lit under, I think, yeah.
Right, but yeah, under 2 years actually. Oh, well, more importantly, she's, if you look at the composition of her board, it's mostly Biden nominees, so I just think it's going to be really hard for anyone to get the ILC approved by this board, whether she's in charge or not.
Interesting.
And I think I agree with you. Probably the better way to do it is just get a national charter or a state licensed charter. That'll probably just go through the normal way. ILC, to me, is going to be dead in the next couple of years.
Interesting. Yeah. Any comments, Bo?
No. Let's move on.
Let's move on. Okay. Want to talk about our good friend Renaud Laplanche. He has raised another round, $3.3 billion valuation, raised $105 million. And I'm going to actually defer over to you, Dan, because as we were chatting before we went on the air, Dan has actually invested in this round. So, Dan, what attracted you to what prompted you to invest?
Well, I mean, so obviously we're a very small investor in this big round, and we are a new firm. We don't have that many bullets to shoot, but we are very excited. So the first time, a couple of months ago, Renaud first sort of told me that there was going to be a fundraising. This was really just less than a year after he raised a Series D, which value upgraded $1 billion. My gut reaction is, I wanted to get in without even knowing anything. Obviously, we did our due diligence, and we look at the numbers, and it's just fantastic. I think one of the things that Renaud really attract me, not only just because obviously just like you, he's a longtime friend as well, and I really very much admire his. He was the brand for not for Lending Club, but for the whole market lending industry in the United States. I think what really attracted me was I don't see Upgrade as a lender anymore. I see it as a true neobank, even though the name has been probably used, by so many different people with different meanings. But I think it's different from the sort of the traditional neobanks that we have become very familiar with, such as Chime or Varo or Aspiration. So those guys started with just a debit card, and they take advantage of a Durbin interchange cap, so they can charge high interchange rates. Whereas and their customer base more of either is very niche or sort of a low income, underserved consumers. I think Renault attracts a very mainstream consumers. So these are the people who have 700 FICO or close to 700. So they have a better credit quality. And I think the car which Bo, you and I talked about before we went on air, is a really interesting play compared to debit cards. This is not a credit card, by the way, but it is functioning like a credit card. Actually, it has a very much better unit economics, and now he's throwing this Bitcoin rewards to it, which adds a lot of a mainstream appeal. And for people who actually don't understand digital assets and want to give a try, so that's a good opportunity for them to try out. So, and just look at the growth trajectory. I think, and I think Bloomberg reported he planned on going public in probably between 18 months to 24 months. And I think even in that time frame, I believe we'll continue seeing explosive growth, and he will make his investors very happy.
What I heard there was super interesting, Dan. Is this is a card that is better for the consumer because you're going to end up paying off your loans faster by its design, and it has better unit economics for the bank than the traditional credit card, which already has good unit economics. And so that sounds like a pretty solid win-win.
Well, as long as you're under $10 billion in assets, right? That's,
yeah, but for him it doesn't matter because
Yeah.
it's not a debit card, right? Yeah,
Right.
If you have $10 billion assets on your bank, yes, then you can take advantage of Durbin. But his unit economics are way better than the Durbin. Durbin is what, 20 cents plus? Well, it's about 2 to 3% under Durbin, but his unit economics is way better than that because it's an installment loan basically for every purchase.
Right.
So the interest rate is still lower than credit cards. So I think he's basically cannibalizing the traditional credit card issuers, which charge 14, 15, 16, 17, 18% APRs, right. And his is sub 10%, which is way better deal than the traditional credit card if you carry a balance. If you don't carry a balance, it doesn't really matter. But if you do carry a balance, this is a much better deal.
Yeah. Okay, moving on. I want to talk about Zilch. And many of you might not have heard of Zilch yet, but they are a UK buy now, pay later company. And we have another old friend of LendIt that we're going to talk about here, Albert Peru, who we've known him from his funding circle days. In fact, he came to the very first LendIt prior to him actually being at Funding Circle. He used to run a small business lender called Endurance Lending Network. But anyway, that's a long-winded way of introducing them. Zilch has acquired Nepfin, which is with Albert Peru's company after he left Funding Circle. He basically, they've been a middle market lender. They've been focusing more on e-commerce lately. He really gets the sort of the e-commerce play. And Zilch wanted an entry point into the UK. And I actually chatted with Albert 3 times over the last month, and I wrote a story about it on Lend Academy earlier this week. But it's an interesting company because it's an interesting play. Zilch wants access to the US market. They wanted a way to kind of enter in a way that they didn't have to start from scratch, and that's what I think they're getting with Nepfin. Nepfin has a lending license in California. They've got a tech team, regulatory team, and obviously Albert, really deep experience in capital markets, and so that is.
Sounds like the playbook, all over again from the Funding Circle acquisition.
Exactly.
Yep. I mean, you described exactly where Endurance was when Funding Circle went shopping, and that turned out really well. I mean, yep. So anyway, yeah, I think Albert's been here before, and he's going to be able to lead his new partner to do good things in the U.S.
Yep.
So I mean, just maybe a question for Peter and Bo. So obviously, you guys know Zilch much better than I do. So you describe it as a buy now pay later play, but it's also different from the traditional buy now pay later, like Affirm, Klarna, and Square Afterpay.
Yep.
Which is they're not merchant focused, they're consumer focused. So how does that work?
Yeah. So the way the Zilch works is It's all consumer focused. They don't have anyone going out to merchants. It's basically a debit card. It's a MasterCard debit card. You can use it anywhere a MasterCard is available, and they just have some fancy programming on the back end that gives you. They have an app, and it gives you the option to, every time you swipe the card, do you want to pay in 4 installments? It's the Afterpay model, or the PayPal Pay in 4, whatever it is. It's that 4 installments, you 25% down, and 3 more installments in 2-week increments. That's what they're doing. But the differentiation they have, and it's a subtle one, but it's really profound, is that you can go out to dinner and you can use this. You can do it as there's no merchants. Whereas Afterpay, Affirm, Klarna, they're all working with merchants, and that's really their focus, a merchant focus. So this is a consumer focused product.
Really a compelling idea if indeed it works as advertised and takes off. I mean, word of mouth, I think, will play a big role here. Obviously, there's going to be some marketing spend, but the idea that you don't have to go and acquire merchants to make this work, and that a consumer can kind of make their own decisions about what they want to finance and what they don't. But again, all these things have implications as to personal finance and how to track it, and the ability, I think, of analysts to understand the capabilities of the consumer that's using these various different payment methodologies is becoming more complex, and it's becoming more complex for us as consumers as well. So we have to be careful as we wander into this new world, but also it is exciting to see so much innovation going on.
Yep.
Yeah, I have to say it's interesting to see how the incumbents respond to the threat of buy now pay later. So you have obviously Apple entering the space. Then you have also the traditional banks, credit card banks, right? Chase, for example, because I'm a Chase customer, and American Express as well, because I have also Amex card. So every time you make a pretty big purchase, I don't know how they define purchase. I don't know how they set up the threshold. But if you have probably a couple $100 purchase on your credit card, they will automatically ask you, do you want to split the payments into 4 or 5 payments? And Amazon does the same thing too. So it will be interesting. I mean, this is obviously they see the appeal of a buy now pay later. And they wanted to sort of innovate on the existing products. But I do think Zilch's approach is very interesting. It will be interesting to see how they stack up against the traditional buy now pay later company.
Yeah, because I think one thing that we've learned in the last 18 months is that consumers really like this product. The consumers like to be able to split payments into 4. It's it's popular, and I think that still only a very tiny fraction of commerce is done this way, and it potentially could end up being a large chunk. So anyway, want to move on. I want to talk about Plaid. They settled a $58 million class action lawsuit. I didn't even know about this lawsuit till I read about they'd settled it. 98 million people potentially are affected. I'm sure the 3 of us are part of that group, because I've connected all sorts of things via Plaid over the years. And for a while there, I would connect via Plaid, and there was not even a Plaid logo. When they started off, there was no Plaid logo. I knew it was connecting via Plaid because I'd researched it, and so I think this is what part of it's about, is that they say people did not realize that Plaid was a middleman here. And if everyone makes a claim, we're all going to get 60 cents or thereabouts.
Nice payday.
Chump change. They just raised, huge pile of money. They can raise more at the drop of a hat. This is swatting a fly for them. And I don't know to the degree that there was even any merit here. I'm not even going to say there probably was, but like a lot of times there are big lawsuits and they get settled, and the company does not have to admit liability or fault, and that's part of the settlement. And sometimes I'll say that there was no fault, but they're just like, look, $58 million is a pain in my ass. Let's move on. If it carries on longer, it's just going to cost us more in PR damage. So it's a lot of money, don't get me wrong, but it's it's not, in my mind, a lot of money to this company that is
Plaid can
really
afford
doing
it.
great work.
Yeah, it's interesting. Yeah, so when I first read this lawsuit, I think it was last year, maybe even in 2019. I felt like it was kind of fishing exercise. Some trial lawyers trying to make a few bucks. What turned out to be a lot of bucks, not just a few bucks. But I do think there are some interesting consequences in light of the CFPB's effort to write a rule under Section 1033 of Dodd-Frank that will give consumers the right to access their own data that is housed by their banks. And do not forget, there's another lawsuit that's still ongoing between Plaid and PNC. And PNC, if you look at their PNC's lawsuit, there's a lot of not exact but similar claims in the lawsuit to this one that Plaid just settled. So to me, I think that I don't think this is a surprise, but I think this is something that I think this not just fintechs, aggregators or even regulators are going to look at, is really the retention and deletion of the data. So if you look at the claims, one of the claims that they actually settle to is that when you use Plaid to connect your bank account, right? Let's say you have a loan, you open up a loan with Lending Club, got approved. The Lending Club say, okay, so why don't you just connect your bank account so we can fund the loan automatically without having to cut your check? You do so with the Plaid, and you connect your account with Lending Club. I'm using Lending Club as an example, obviously. But then all of a sudden, Plaid not only has your routing account numbers, but they'll also have access to your transaction history. And somehow the transaction history is also being retained by Plaid. So, and I think in this settlement, Plaid has agreed to, since that information is not really related to the use of this Lending Club product, they agreed to delete those data. So I don't know how many others are doing the same thing. Maybe they're just not being careful. But this lawsuit will serve as a very interesting precedent for other data aggregators. And there's also some discussions about more conspicuous, privacy disclosures, more consumer education. Again, I think these are things that the CFPB already asked during their in their ANPR for the data access rule. So we'll see how the new rule, if it comes out next year, or maybe as early as the end of this year, is going to take into consideration of these new data points.
Right. Okay, moving on. I want to close today with, I think, one of the craziest stories of the week, and that was the hack against from the DeFi platform Poly Network. $600 million was taken by a hacker, and this person then it was crazy. Like, then Poly Network wrote a letter to this hacker saying, please return the money. This is not our money. It's other crypto enthusiasts like yourself. And so the hacker did. He returned half the money, I shouldn't say. $600 million. Roughly half has been returned. And I was just reading a CNBC piece earlier today saying that the hacker claims he's not really interested in the money. He saw the vulnerability. He saw the amount of money he could take. So he thought, well, why not? And anyway, it's not a good look. Not a good look for DeFi, but it's a crazy story.
It is a crazy story. Dan, do you want to jump in on that?
No, please go ahead.
Well, my understanding is that with a lot of these transactions, they are actually quite easy to track and trace, and that's sort of why it's part of the appeal of crypto and the blockchain. And so it's possible that the hacker was like, whoops, what do I do with $600 million? I better start playing good guy because there's no way I can hide this. And he probably, as we referenced before, he probably lit up like a Christmas tree on the FBI's, systems. And so, my guess is that it's time to play good guy for a thief that was really trying to be a bad guy in the first place.
Yeah, and also remember the Colonial pipeline ransom, and the Fed also was able to recover all the ransom money, all Bitcoin. So yeah, the traceability definitely is a appealing aspect of crypto. But I think at the same time, it also gets people very concerned, right? So these institutions are not I don't want to use the word unregulated, but they are regulated, but they are not sort of as safe, at least in perception, as your bank. Even your bank may be just a community bank, a small credit union, which is still got the FDIC insurance behind it. So we're still in the early stage of DeFi, and I believe this is the future. And I think we'll make, not just as consumers or users, but also developers and the institutions are going to make mistakes along the way. But this is the future. I think this is just going to be a blip in the long when we look back probably 10 years from now, and this doesn't really shake my confidence of this DeFi trend at all.
Yep. No, I agree. I think DeFi's here to stay, but this doesn't. It's not a. It just shows that there's growing pains ahead. And one of the things that I'll say is that the Poly Network published his addresses that he was using, and then some forensic criminal investigators, they have his IP, they have his email. They don't actually have his physical address, to my understanding. But I'm guessing that they will find out exactly who this person is. But anyway, that's all we have time for today. We've gone over time. Thank you everybody for watching. We'll be back next week at the same time. Thank you, Dan, for joining us. Thanks, Bo, as always. Have a great weekend, everybody.
Thanks,
Thank you.
Dan.
Bye-bye.
Thanks, Peter. Take care.